Ladies and gentlemen, welcome back to Fintech Asia Edge podcast. With me today is a friend whom I've known for a long time, big support when we were setting up the Fintech Association of Hong Kong, but also a rock star and OG of Singapore Fintech. Mr. Varun Mittal, Chief Innovation Officer of SingLife, also co-founder of Founder Nation, and well established and well author in the same field, having written Fintech Nation book, plus one of the most known faces in fintech in the region. So, Varun, hi, welcome and thank you for doing this with us. So, I'm delighted. The last time I was here was the last flight I took before COVID was Singapore in 2020. And then, of course, COVID, then now we're back. Singapore looks as lovely as always, and SFF is looking to be at a different level. We're sitting here, the sidelines of the Insights Forum. It's a prelude to the main conference starting soon. Tomorrow we'll cover that as well. You've been in this space before all of the noise, hype, etc. and stuff. What attracted, brought you into this fintech world, and what was your life before Singapore Fintech and the other companies?
So I was a computer scientist by training. My first job was actually in the company which was making software and hardware for credit cards and SIM cards. Okay. So at that time I had not figured out, and there was nothing called fintech. I started to get into the payments industry because there were not many people who do marketing, sales, and understand tech. Yeah, from that perspective. And what we saw at that time was Singapore had this unique phenomena which was great for it. Singapore has this something called kiasu culture.
Okay.
So we are afraid of failing. We will follow the regulations. We'll follow the line, follow the queue. And that works beautifully for regulated industries. It may not work as well for some of the other verticals.
Sure.
But for regulated industries like financial services, where fear of regulation is important, this is perfect.
Agreed. Yeah.
There were some foundational factors for Singapore. Why it worked. You were here. I was here from that perspective, and there were foundational things. Think of it. Singapore is the only country in the world which has only one regulator for financial services.
Correct.
For whether it's public markets, capital markets, monetary policy, fiscal policy, everything is one.
Insurance, all of it.
Everything is just one regulator.
Yeah.
So stuff moves much, much simpler, faster. You don't need to synchronize a bunch of things. And also historically, if you look at it, post-independence, in the 70s, Singapore figured out that one thing they can export is time zone.
Yeah.
So it became a dollar trading hub. From that, between Japan and London, Singapore took it.
Yeah.
And funnily, people don't realize Singapore's time zone, even though Singapore and Hong Kong are not exactly their same time, but
4 hours away from
but the time zone is exactly same. And that was because it wanted to be in the same trading circuit and cycle from that perspective.
Correct. Yeah.
So that's where the foundation started to happen. And then if you are in this play and you are starting to look at those companies and stuff, I was fortunate to be part of some of those companies. Some of the investments made at that time became large, so we had more capital. Sure. And 2015, when Singapore was looking, it's 9 years now. Next year is the 10th celebration of Fintech Festival, as well as 60th celebration of Singapore's independence. So 9 years ago, it was not that big, and everybody was figuring it out. Everybody was trying to do a small thing.
Yeah.
And I remember that time we talked about, okay, how you were setting up an association there, we were trying to do there. So it started from the grassroots organically, where suddenly the historical, geographical trade advantage combined with the good rule of law, predictability and everything, plus massive technology investments by FI firms in these hubs.
Yeah.
Because the headquarters were mostly Singapore, Hong Kong, APAC headquarters. So you had a bunch of these factors from that perspective, which is what got me.
And what were you doing at the time when Singapore Fintech Association was established? You were, as you said, similar time to when we set up the Hong Kong Fintech Association, and then it's both the hubs have grown in parallel at different paces on different things, but in a sense grown because of forward-looking regulations and others. But what was your career, and how did that change as you got into fintech world?
So I was doing a payment startup at that time.
Yeah.
And my frustration at that time was banks have ABS, Association of Banks in Singapore. Insurers have LIA and GIA, Life Insurance Association, General Insurance Association. So everybody has, and like, who's ours? So we don't have. And when we were talking to regulators, they were like, we would love to help you, but
we need a representative.
Who represents you?
Fair, we have the same story. Yeah.
Who represents you? So I'm like, okay, if nobody represents you, we'll create our own which represents us.
Okay. Yeah. And it was a great way to start. So now let's talk two things. Okay. We'll come into your personal journey as well, but maybe let's start with the journey of Singapore Fintech. So you've spoken about roughly 10 years, so Singapore Hong Kong Fintech, but the journey that both the ecosystem has seen from a fintech's growing perspective, but broadly that adoption of digital finance and fintech as we know it over the last decade. How have you seen that transition and grow and key factors in addition to, of course, have a single file regulator? What are the key things that you've seen?
Yes. So one of the big things has been digitization of national infrastructure.
Okay.
So because now, for example, for Singapore space, you have SingPass, Mindful.
Yeah.
So literally every FI can use that infrastructure without worrying about it.
Sure.
So one funny fact is, Singapore was the first regulator in the world to have an internet-only bank license in 1999.
Yeah.
Some banks tried it, but nobody actually ended up being one. The reason being it was a dial-up modem generation. So the regulations was there, but nobody the infra wasn't there. So the premise was Singapore was like, for example, pay now infrastructure. Yeah. Quasi-free, low-cost, real-time payments infrastructure. So you solve the payments rails, solve the KYC law, you solve the other regulation access layer from that perspective, which is the foundation then which can be used because the banks would have the branches to afford the offline versions. So
correct.
But the fintechs could not. They needed that infra. So I remember first time when I opened a Wise account, I had to go in person to Wise office in a shaded building at like 12th floor to open a Wise account with physical thing.
Yeah.
So that foundational infrastructure getting clear. And if you look at India and other markets also, right?
Correct.
It was the foundational infra became the foundation for the next generation of fintechs to build it. Of course, banks also took it.
Yeah.
And fintechs also took it. So that leveled the playing field. Just think of it. All the internet apps happened because Facebook happened because the previous generation built out the rails for internet to be there. Without internet being pervasive on $25, $50 devices, Facebook Meta world would not become what it is.
Yeah.
So fintech world became because of commoditization, standardization of regulatory KYC infrastructure and payment infrastructure in most of us.
And I think that's an important element, right? We don't talk often about standardization, which I think is a big challenge globally in terms of allowing people to build because you don't have to worry about each person has something different. Their configuration takes a pain. One-to-one. And so as a group, you're not able to do much. And harmonization of regulation, of course, is a big driver. And that it is remarkable that you have on one hand developed economies like Singapore, Hong Kong, highly, $50,000+ US per capita economy using digital infrastructure of the government. And on the other hand, you have a comparison with India, where again, it's an economy which is 3,000 to 4,000 US per capita, but also largely leveraging our district infrastructure to grow the scale that they have.
The contrast is America.
Yeah. On the other side, right? Yeah.
We still don't have the level of public infrastructure as most Asian countries do.
Yeah, we were talking, Monica and I were talking about this in the fintech headquarters where we're like Fed now, which is the real-time payments for right? It just came to being 2-3 months ago.
They still don't have a card
They still have and it's all segregated, siloed in state versus federal, and 49-50 licenses required for operate pan country. So coming to that, so one is you've now had a digital infrastructure, you now have the layers, both FIs and fintechs and on top of it. What about adoption? This has been a bit different in different markets. We've seen developed markets in Germany and a bunch of others where cash is still heavy and the transition to digital is very different. Like then you have on the opposite side Sweden, etc., where it's almost cashless completely. How has that transition been in the local adoption of fintech?
So Singapore, there's been significant adoption and there have been a lot of government nudges also, right? So government said, okay, if you want to receive the subsidy money due to the COVID, you must register with PayNow. If you don't have PayNow, you will not get it. Okay. Simple, don't get it. So you have no choice, right? They will have to come on board.
Sure.
From that. For example, checks, for example. So there's a regulation around like checks getting phased out for Singapore dollars like this. So this gets pushed down. So of course, and people also find it easier, comfortable from that perspective. But also there are these nudges from that perspective to push that adoption further up, which has been phenomenal from that perspective.
And how are you? And since we are talking about adoption, and we won't go too much down that road, but there's all this conversation about how there's been a lot of retail usage of stable coins in Singapore, also virtual access to a certain extent in terms of adoption. Are you seeing that in real life as being more pervasive, or is it still in pockets and high volumes in certain pockets?
You see, that for certain use cases, it started to pick up a lot more.
Okay.
So it's a more use case driven from that perspective. So if you're looking at one side emerging market, one side developed market currency, that use case is. Factors where they were earlier close loop loyalty currencies, that gets replaced by stable coins because then most merchants do not have the mechanism and infrastructure to manage a closed loop.
Correct.
And for them, that open loop play suddenly makes it way more powerful, which is why that, like, Grab, for example, is doing that. In addition to their point, they're working with like PayPal USD from that. So in Singapore, for that matter, right, adoption wise, you can now pay for any utility bill and insurance premiums on stable coins and crypto legally. Not through like a workaround kind of thing. You can buy any Apple devices through iStores using that. You can pay for donations of Red Cross using stable coins in Singapore. You can top up your Grab wallets with stable coins. From that perspective. So if you look at the walks of life, right, use cases enabled across the board from that perspective.
And I think it's interesting because we're seeing this merger of traditional fintech with digital assets. I'm using the term very loosely in terms of potential fintech, but what I mean by that is the rails that were there were not blockchain rails, and now you have the stable coin, which is blockchain rails, but for the end customer base, then it's just another subtle token. Right? They're not really too concerned about the infra. I don't have to worry too much about using it to do Ether and transferring, etc. That management is a big, I think, important element of who manages and how it gets managed. Although there's so many people who push the DeFi narrative in terms of you want everything should be on, which there is a market for. But the broad retail market, I think, wants somebody else to be taking care of you.
The number of people with steel safes in their house, steel lockers in their house, is a fraction of the number with bank accounts.
Very true. And so we built this. We've had this in Singapore. Now you're working for one of the largest institutions in Singapore. Tell us about what attracted you to move from being deep in fintech weeds, if I may use that term, to going and working for almost like a traditional financial services firm, but an innovation. Nevertheless, but what was that motivation from your personal?
So interestingly, like SingLife was the first insurance company to get a lead license in 4 years. Singapore had not given one, so it was a challenger from that perspective.
Sure.
And for me, I've done payments, I've done well, this stuff. I've not done enough of insurance.
Sure.
Like, okay, it's a challenger.
Yes.
Acquiring an incumbent. And there's a lot of more fun stuff to be built and stuff from that perspective. If you look at like a portfolio of like, okay, what are the other different verticals? And other thing was, fun data point, right? I had the gut feeling, having done a lot of M&A, buy side, sell side. That the next wave will be in insurtech.
Sure.
Which is why, if you see the largest transactions in Singapore in the last 2 years are all insurance. Really still was taken private. SingLife had a deal. If you look at the NTUC, Allianz, leave aside the regulatory stuff, but just on the pure dollar terms, perspective. So still, from that perspective, I had a hypothesis played out right over the next 3-4 years.
And how's that journey been? How have you found this working in a corporate family user?
This is fantastic because my job as head of innovation is to look at new interesting partners to co-create propositions with them. Because a lot of them have customer bases, they have trust with the customer, and they want to figure out ways to create experiences. So we call it like SingLife experience. create experiences to monetize stuff together, to create value together. So then I spent a lot of time, my time with the fintechs I used to be with to create next generation solutions with it. And because you see, payment is commoditized, they also know that they cannot do much more in payments significantly, right? Some of them have tried wealth. Okay, how much? There's a play of micro investments and everything. There's merit to it. Okay.
Got more, yeah.
Or more. You need more wealth stuff, which we also do in like this. SingLife also one of the largest wealth platforms in Singapore. So do that also. So, but the idea is that as people are, because you see, I usually say this, there's a trinity we are facing. We will live long.
Yes.
Inflation will ensure that we will have to work very hard to not live poorer. And the cost of healthcare is only going to go up. So these are three truths which are tough to disagree. So that's where, and these are three social truths which hits everybody. So now you need ways to protect you in that environment. And how to have right decumulation products, how to have right protection products, how to have right access to healthcare from that perspective. So you are facing once in a generation trinity to hit your generation. And you are at that crossroads to create solutions to address that.
Correct.
Those are fun problems to work on.
This is just quite interesting, and then I keep talking about the 100-year life as in book about Linda and Scott and business. Which talks about longevity, the inflation story, the returns, pension, how much longer you're going to work, and this is a very interesting thing that I think we'll definitely build up. Although having said that, for that trinity, there is probably a couple of things. If it goes right, looking positive, AI, which could then diagnose from all of this. Hopefully,
you have to pay for the diagnostics.
You have to pay for it, but if maybe the ChatGPT and others, you can get commoditized so much as we do see. And the second element starts becoming all the biohacking that's going on. It's very expensive now, but maybe when we are in our 60s and talking about it, there may be more for us to build on, because that's why they're talking about how they're trying to monetize cancer drugs. Very, very expensive, and generic drugs in India may be able to do it given the time frame for IP starts along the way. And as a continuation of that conversation, how do you see the developed economies versus developing economies when it comes to the focus on innovation going further? What do you think would be like 3 teams each, or would there be some overlaps that testing out this time?
So all of them have to start looking at where's the value from that perspective. Because you see, AI models will be same for everyone. From that perspective, it's not like one country has special powers. Unlike in chips, where you have more control over commoditization, unlikely in AI you will have that. From that perspective. So which is where the question will become, where will you create productivity from? Where will you create financial, like how to say, value for that? Because there was this joke over here. I wanted myself to make paintings and poetry, and AI to buy laundry and dishes. And now it's the reverse. So where does it end up? Because you can create a lot more data, but what do you do with it? So printing press had to figure out the real value of use case, right? Okay, this creates education. So, okay, what do you do with that education from that? So that's something which is not really clear there. And which is where countries will have to figure out what is their play. There are countries who are playing on providing manual labor. That gets commoditized. Now suddenly you have a large number of graduates in emerging markets doing BPO jobs. What jobs do you have for them? Some countries like who work in the manufacturing space are now facing the challenge because you can robotics which are trained and everything to fight that. So both sides are trying to figure out where are the next generation of efficiency and probably healthcare is one. So the way I would look at it is the next generation of economic development is what will people have to figure out. They don't know the answers. They're more unknowns than knowns. And the questions are not too dissimilar. The dissimilarity of questions is demographic space. The Western countries, some Asian developed countries are more worried about lower fertility rates, depleting working populations, versus the other ones are worried about we have too much working population, but we have not enough working population. So that is where I would expect the more challenge to come. But knowing what to do with that, when internet came, most economists could not figure out what do you do with it. Then they figured out you could do commerce with it, you could do entertainment with it. So AI also will go to the scenario where people will figure out what do they do with it. That's really winning.
Which is fair. I was thinking as you mentioned about internet, right? It was like the amount of data that's been generated over the last 5 years, maybe more than an entire human history. Largely because you had newer ways of our day-to-day life, and you're walking around was never recorded. Now everybody's recording it. It becomes billions and trillions, and a huge number of bytes. It's hours of videos that are there. Right. And things like social media manager, community manager, content creator, all of these are non-existent. Even 10 years ago, probably, right? And now these are among the major roles that we have here. So moving forward, what are your three predictions from the future of fintech finance perspective? We sit down at 2030, right? And this could be in 6 years' time. Realistic, what do you think? Could be three major things you expect to change.
Expect regulators to have a view around which entities are pure license entities and which entities are creating propositions. Sure, to have more segregation and more clarity and structuring around that.
Okay.
Second one, I would expect regulators to break a lot more monopolies which still exist.
Fair. Yeah.
And which is why you're seeing that on China. In US, there are some talks of that happening.
Europe
Exactly. So a lot more internet generation monopolies across industries, whether it's a card, whether it's internet commerce, or they will get broken. And China has created a playbook of that it can be done. Yes, there will be short-term pains, but you will figure it out. You will figure it out. In the last one, I will say, there will be a lot more work around healthcare and related financial services around them. Sure. Similarly, and I would say this will be analogous to what happened in the content and internet industry. The whole way the content was streamed, created, distributed, monetized was flipped head over heels.
Yes.
So I expect that to happen in healthcare and financial services coming together in the next 6-7 months.
That'll be very, very interesting. Now, we can't end this without talking about your book, from the upcoming book. Tell us a little more about to our audience, what can they expect from this exciting book?
So what we did was, being a founder is very unusual. We are a founder, so you see that
I can imagine.
there are rough days, happy days, and the crusts and troughs. So the people who help people through the. So we took an inspiration from some of the concepts around where they showcase the gratitude. So we created this where founders would nominate people who help them during their journey. And we call it the power of gratitude. And we call the book is called Superhuman Supreme. There are 20 stories where 20 founders have shared real stories, pictures of how people help them in their journey.
Yeah.
And we want to make gratitude mainstream. That's something that we'll be releasing as of later this week. So that's how we're looking at it.
Yeah, this is one of it. It's one of those under-recognized conversations that only those who help you, right? It makes a big difference. So we completed 5 years recently in Insta Asia. And I said this online and I say this again, there was a lot of people in the system who did it out of their kindness, no gains, nothing, no personal or commercial. And they did it because they were wanting to support. And it's a person that they knew, and in some cases, not that their friend, but they were kind enough to say, okay, here's this, we support. Here's an opportunity which you can work on. And that makes a big difference. Even if it's a little smaller, it takes you 2 months, 3 months into your journey, that all bridges up, right? I said. All right. Been a pleasure on talking all of this. I will end on the last thing. You've been an investor, in quite a few Indian startups are now done quite well. What has that journey been like? And also for professionals to think about angel investing, what would be your Vishesh Tippani on that?
So I would say is that God has been kind, more times lucky than not lucky. It's a very complex thing. Do not think that you will do 2 and it will work.
Sure.
It's complex. Take proper financial advice on how much capital you can risk. And be mentally prepared to hold for 8 to 10 years. This is not public markets.
Correct.
Most first timers do not realize the illiquidity of that asset class. There are there are pros of this asset class, but illiquidity and lack of action and no ability to see the price every night on the screen can be unmanageable.
Yeah, it's put it in and forget it kind of story, right? Yeah. Perfect. Thank you so much. And we're looking forward to SFF version 9 in the coming days and having you again in 6 years' time. Thanks again.
Thank you so much.
Ladies and gentlemen, stay tuned for more of such interesting and deep conversations through our time in Singapore. Like, follow, and subscribe to our channel for more interesting conversations. Thank you.